morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the conglomerate sector, in particular two of the three stocks on the local Trinidad and Tobago Stock Exchange in that particular sector. And we're speaking, of course, about Massy Holdings Limited as well as GraceKennedy Limited. Now, both groups would have reported increased earnings, though for varying reasons to some extent. Let's take a look at how they fared and what investors can expect in the months ahead. Firstly, looking at Massy, we would have noticed that for its half-year fiscal period for 2021 ended March, the group would have reported an earnings per share figure of $2.98, which is a very commendable increase of 23.7% from the $2.41 recorded in the prior comparable period. Now, revenue from continuing operations was actually fairly flat. It actually declined marginally from $6.072 billion. However, squeezing out some efficiency gains from their portfolio, they were able to deliver operating profits after financial costs of $437 million versus $360 million in the prior comparable period, a 21% increase. And we see that profit before taxes actually increased 17.3% from $394 to just around $462 million. There was a tax credit involved there. And overall, there was an increase in profit attributable to shareholders of that 24.7% from $235.3 million to $293.5 million. Now, when we take a look at Massy's segment performance in terms of profit before tax, we see that there were some marginal gains in terms of integrated retail, despite a decline of around 4 to 4.5% odd in terms of total revenue from the segment. We see that profit before taxes actually increased around 2.3% from 200 to 205 million TT dollars. We can see also that gas products, however, would have experienced a decline in profit before taxes from 108 to 98 million, and its motors and machine segment would have also declined from 83 million to 76 million TT dollars. So there was some challenges. However, overall there was a net increase in profit before taxes, and that was driven in the main by an increase in financial services, or that financial services segment, which would have moved from $35 million in profit before tax to $76 million in PBT, and much of that would have been attributable to recoveries in financial markets accruing or to the benefit of Massy's bottom line, or profit before tax rather. When we look at Massy in terms of its geographical composition, we've noticed a continuing trend, and that has been a decreasing reliance on the Trinidad and Tobago jurisdiction. We can see at the half year of 2020, there was 42.3% of profit before tax generated from Trinidad and Tobago geographical segment. That has declined to around 38.5% in the first 6 months or half year of 2021. Some of the notable increases: Barbados increased from 18.3 to 20.2. Guyana would have increased from 15% to 18.4%. Otherwise, it was pretty much as you will, and Colombia would have also increased from 5% to 7% in terms of PBT by geographical composition. So a nice story in terms of increasing geographical diversification for Massy, which always redounds well as operating conditions change across different jurisdictions from time to time. So at a price of $67.97, Massy is trading at a relatively attractive valuation of around 9 times in terms of its price to earnings ratio, compared to the 15.1 times of the sector average on the Trinidad and Tobago Stock Exchange. The dividend yield is at 3.8%, which compares favorably to the sector average of 2.8%. So on the basis of its relatively attractive valuations, that increasing geographic diversification is most recent intent to cross-list on the Jamaican Stock Exchange, which will generate a lot of investor buzz, but overlaid by that lingering economic uncertainty across its operating jurisdictions, Bourse is going to maintain for now a neutral rating on Massy. Turning quickly to GraceKennedy, for that first quarter period ended 2021 March, the group would have recorded a TT dollar equivalent earnings per share of 7.45 cents, which compares favorably to the 5.93 cents recorded in the prior comparable period of first quarter 2020, which was a 25.8% increase. Now, revenues increased an impressive 8.8% from 1.295 billion TT equivalent to 1.4 billion. Net impairment losses actually reduced on its financial assets from 11.1 to 4.7 million. And there was also an increase in other income from 28.8 to 37.8 million, a 31% increase. Overall net income attributable to shareholders increased at 25.6%. from 59 to 74 million. Now, it has been a pretty good performance across the board for GraceKennedy in terms of all of its operating segments. In its food trading segment, the largest revenue generator, we would have seen it increase its profit before taxes from 54 million to 66 million, as well as its money services segment would have increased from 37 to 47 million, and banking and investments also a smaller segment, increasing from 4 to 7 million, and that insurance services segment also increasing from 0 in the first quarter of 2020 to 4 million TT equivalent in the first quarter of 2021. Now, at a price of $4.86, GraceKennedy is trading at a price earnings ratio of 16.4 times, above the sector average of 15.1 times, and offers a less attractive dividend yield of 1.7% compared to that 2.8% sector average. Now, GraceKennedy does pay its dividends in US dollars, and there is that benefit of a non-discretionary revenue base, meaning that from that food trading business, it is fairly inelastic, despite whatever conditions that may be confronted. And we've seen that bear out in the first quarter of 2020, as well as the first quarter of 21, with nice gains throughout that particular segment. And of course, Grace has been embarking on several acquisition drives, and that should redound to investors in the long run. So for now, but again, given that economic uncertainty, Bourse is going to maintain a neutral rating on GraceKennedy. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Check out our website at bourseinvestment.com. And of course, you can email us at invest@boursefinancial.com. Please stay safe. And until next time, this has been the Bourse Report.